Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week, and if you haven't heard yet, the Fed's Jacksonhole symposium last week dropped the proverbial bomb on the markets. All indices tanked, and lending rates across the board got clobbered for the worse. Now, last Monday Mortgage Minute, we said that this was a very important meeting and press conference, and boy, was it. Clocking in at just a few minutes, and without taking any questions from reporters, Jerome Powell warned us for some pain ahead, thus confirming the data and suspicions that we've been seeing for quite some time. Specifically, the continuation of raising their Fed funds rate until inflation gets back to their target of 2%. For reference, it was 9.1% in June and 8.5% in July. And that's a pretty nice move, but it's still 8.5%. To put that into perspective, inflation will have to continue in the same direction at the same rate for 10 consecutive months in order to get to 2. That puts us at May 2023 at the earliest. And quoting Jerome Powell, "We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. And remember, all those factors have to be constant in order for that to happen. And that's unlikely due to the supply side and the demand side factors that are at play. In short, brace up. We're going to be in this for more than 10 months. So what does this mean for mortgages? Number one, continued pressure on rates. Jerome Powell even said that the Fed has to be extremely cautious about easing monetary policy too prematurely. He said that the failure to return price stability to the markets would mean far greater pain. Hold on. There's something worse than the current plan that makes the current plan better than that? Well, okay, that basically means we're not going to see rates plummeting anytime soon. Number two, that redirects and points our focus back on home prices. Watch for house prices to flatten, like we've been saying for weeks, and even correct in the next few weeks and months ahead. You're already seeing two force functions at play. Number one, you're seeing more listings, which naturally bring some price pressure to those that are on the market. And you're also seeing listings have price reductions, even here locally in San Diego. Further, the amount of homes on MLS that have price reductions as they've sat on MLS longer is increasing week over week. So if you've been sitting on the sidelines and you've been waiting to buy a home, pay even closer attention right now for the next few weeks and months ahead than maybe you have over the last couple of months as you've been focusing on rates only. Return that attention to refresh your file and figure out, what do I qualify for now, and look ahead at what might be happening in the market, in the neighborhoods and communities that you're interested in, and see if there's a new opportunity for you on the horizon. And lastly, it's a foregone conclusion that the Fed's September meeting already has a rate hike baked into it. The new question is it going to be 75 basis points or 100? I personally think that 50 basis points is off the table. It's too little. And given the semi-veiled but strong comments Jerome Powell made on Friday, I just don't think 50 is in play at all. He's even saying that higher interest rates will persist for some time. Well, then that also means they're definitely not committing to a start date for when monetary policy will begin easing. So you take all that together and then you draw that into your own personal conclusions given your real estate and mortgage aspirations that you have. So in conclusion, it is important more now than even before that you are seeing what you're seeing. You're seeing your situation for what it is. You're seeing your job for what it is. You're seeing your personal budget for what it is. You're seeing options in the market for what they are. If you're in a position right now where maybe some of those things are unclear and you need to see what you're seeing, let us know how we can help you make the most of real estate and mortgage through 2022 and into 2023. If you missed our conversation about the home equity lines of credits, go ahead and click this banner up there to go back and watch that conversation and Memo and I talking about what people are doing right now with the equity they have in their home. And also, if you're still deciding on whether or not an ADU is right for the property that you have here in San Diego, you can watch this video where we discuss why an ADU might be beneficial for you for the long term. As always, please feel free to share this video with people you know, like, and trust. Make sure you like the video, subscribe to the channel so you get to see all this first and you get those notifications right when we post. And if you need help in mortgage and real estate for the rest of 2022, let us know how we can help you win right now. Thanks for watching. We'll see you again next week.